A sharp fall in global oil prices and the value of the naira, as well as a major slowdown in much-needed subsidy payments, have brought Nigeria's downstream oil sector to the brink of collapse. The Asset Management Corporation of Nigeria has provided a key lifeline to oil product traders by restructuring billions of dollars in debt and giving these companies more time to pay back their loans. It has also helped to stabilize Nigeria's banking sector that was reeling under the pressure of a portfolio of bad loans.
There are certain banks that probably could have just vanished because the exposure to that industry was large, and then taking that kind of hit on the provisioning will eat deeply into the capital of a lot of banks that were involved at that time. Okay, don't also forget that banks were also suffering at that time from the bubble in the capital market and their exposures to margin trade transactions on the floor of the capital market. Okay, and therefore the twin exposures of what was happening in the downstream sector and what was happening in the capital market would have put the entire banking system into crisis.
But a question mark remains on the outlook for players in the thin margin oil products trading business.
You will then find out that AMCON just helped them to land in an orderly manner. I'm not sure they're out of the woods yet. I believe AMCON will look for creative means, which really might end up being outside themselves, to find solutions using the assets that they had to trade their way into paying back the debt. I believe also that AMCON may have to sell some of those assets. So I do not think parties that were on the left side of the deal are out of the woods yet. Just that they did not die as early as they would have if they had left them with the banks, because the bank would have attacked those assets in a very disorderly manner.
But some players say the government's handling of the subsidy palaver compounded the problems of an important sector that provides jobs and essential services to the economy, and that the government should begin to consider their challenges more closely and consider providing special emergency funding and other support.
When you look at GM, Ford, American government stepped in to help them. They gave them money, 0 interest, waive some of the interest. Today, after 24 months, they paid back the loan. And today, Ford and General Motors is a company to look up to.
Others, however, feel the industry does not deserve any special treatment and that stronger companies should be allowed to emerge naturally from these challenging times.
I don't think the industry needs a bailout. I think the industry should just be left alone to do its business. Of course, there were certain people also that are culpable, which I just feel we should be efficient in dealing with those issues. Government, I would say, should focus very intensely on things like power that will bring down cost of production and make things a little bit cheaper. That would help entrepreneurs start small businesses and employ people. They are the engines of most economies, small and medium enterprises. Focus on things like transportation and all of those things that make things a little bit easier. And then let industries, industries like the oil downstream sector, then pick the fight from there. I think people will be rational. They will make the right kind of investment, whether it's in refineries or in other downstream strategic assets as in tank farms or petrol stations. I think that should just happen naturally. I do not feel people should be forced to do that. I think people should be allowed to trade and compete freely.
Ultimately, however, most analysts agree that in plotting a way forward for petroleum product marketing companies, the solution lies in the removal of the oil subsidies, which, while presenting higher product prices and short-term pains to Nigerians, remain the most effective way to curb the corruption that has caused problems for many players.
The only way out of the problem is end the subsidy. Because when you have a room for anybody to be able to regulate and say, this is how you do it, with the weaker borders we have that we're not able to control, it is impossible to only have a subsidy and not to be able to have people that can be able to beat the subsidy problem. You have oil crossing the border every day. You have people that come in and go out. And I give you an example. I have stations in Togo. Where I am close to the border, in a station, it takes me almost 2 weeks to sell a truck. Because between that, my station to Nigeria is only 50 kilometers. Today, cars are made to go for 300 kilometers without refueling. It is better if I'm a Beninua to drive into Nigeria, fill up my tank, and go back. I still have 200 kilometers to go. And when my oil is about to go down again, cross over again, buy it and go back. Because the difference is almost 60%. It is 40 naira here while it's sold 100 naira there. So make the economics. So how can you stop? You cannot stop a man, a Beninua, from coming into Nigeria. And he is legally allowed to buy fuel in the stations. But if the market is deregulated, is open, the price difference will not make him attractive for him to drive 50 kilometers to come in and to go back in and still be able to use 200 kilometers worth of oil in his car. And this is not only Benin, I mean, I'm talking about the surrounding countries.
In the meantime, there are doubts as to how effectively AMCON can recover the loans linked to oil product marketing companies in its portfolios. With banks less willing to lend new loans to players in the sector, AMCON faces a tough challenge.
Even for those that are in AMCON right now, I think AMCON will have to look for a creative way to get it out and to get repaid. And I'm sure they have the skills and the capacity to do that. But I do not think they are trading right now, especially those who have huge exposures to, because the banks are not supporting them. They will support them only if they want to. And in addition, AMCON does come out to say, yes, you can support them. But it is tough because one other thing that caused a major problem then, apart from foreign exchange devaluation and apart from the prices that occurred, is that there was also a lot of integrity issues. People who were trading in the petroleum products sold products and went to invest in properties instead of paying back their loans. Okay, so what you then found is that the banks then realized that a lot of these parties had integrity challenges, and once you have an integrity challenge, it doesn't matter how good the transaction structure is, you just don't want to go in as a bank.
The management of AMCON, however, says it's reasonably confident that it will make recoveries that are crucial if it is to raise the funds needed to redeem bonds issued to buy the loans in the first place.
As it is today, some of the operators in the downstream have decided to cut their losses by offering their core assets to us to take at determined values. We have already started that process. So any operator that sees clearly the challenges cannot be surmounted, we are willing to go into agreements that whereby we will take over the assets in exchange for these loans. But it is not a solution because we would prefer that they continue their business because we know the implications in the macro economy in terms of employment and so on. But if the challenges are clearly not surmountable, we wouldn't mind taking over the assets in exchange for the loans. Perhaps we can find operators who have the liquidity to manage these assets or who have the track record that they can go to the banks and have access that these previous operators cannot get those access to the loans. So these are the solutions I foresee to go around the liquidity issues or the confidence issues that the banks have in them.
The fact is that Nigeria consumes somewhere between, depending on what numbers you use, somewhere between 50 and 90 million liters of petroleum products. And I'm including aviation fuel, PMS, AGO, and kerosene. So it's a vital lifeline of the Nigerian economy. Somebody has to deliver that product. It is not as simple as it appears. You have to buy the product, there's trading going on, you have to ship it, you have to unship it, You have to load it into storage tanks that are safe, and we've had a few accidents recently. So there's a lot of intricacies in the whole business. And so it's not AMCON's business to go and run a downstream petroleum business for the country. So what we look for is people who are viable, who know what they're doing, who are honest, and who have a viable business model. And then we support them that way. Because if we took all these tank farms and all these storage facilities and we did all this, and all the trucks and truck parks and the filling stations and all that, then AMCON will become a major downstream oil marketer. And that's really not the design for AMCON. That's not our strength. We don't have the staff to do it. So we like to see those with a viable business plan because they're vital to the lifeline of the economy. We have to use petroleum products on a daily basis. So that's why we don't step in and take over these properties and, again, cripple the economy and lead to unemployment. We're reasonably confident. We talk to them. We look at their business models. We look at extensive cash flow models. We also look at, there are some of them that may or may not survive, but some of them will survive. And we actually we focus our attention on those that will survive. We need petroleum products, and the need will grow with the economy. So it's not a business that you can write off. And so we're reasonably confident. We are sophisticated in our analysis, and we're fairly certain that the ones that we're supporting will do well.
Time will tell whether AMCON makes the recoveries, but what is clear at this stage is that by buying the loans of the oil marketing companies, they have stabilized the banking sector and given these companies more time to fix their balance sheets. Precious time indeed, but as long as banks fail to lend to many oil product marketers, their fate over the long term remains uncertain.